Great achievement, 2022, highest profit in 15 years. But I look at the fourth quarter, and the market will say you're light on the top line and you're light on FIC. What was the drag just in the fourth quarter?
Against our guidance for the fourth quarter, we're probably a little bit short on revenues, mostly in the investment bank, but against what was actually a record fourth quarter in our FIC business nevertheless. So it was a little bit of the froth in the very end of the year went away. We're still very pleased with the performance and don't see that as any signal about 2023. In fact, the momentum has really continued strongly into 2023.
Well, the guidance for this year is 28 to 29 billion in terms of top-line revenue. Confident that you will hit 28?
We're absolutely confident. Look, we show in our investor materials interest rates lift us by 900 million, nearly €1 billion. Just that alone, the rate curve coming through this year. And so
what could we get?
We don't have to do that much
what could we
in
get
the rest
this
of the
year?
business.
I mean, with the rates continuing to rise in Europe, what's realistic guidance for the market this morning for the year?
Well, look, it's the 28 to 29. We base our forecasts on the forward rate curve at this point, only a couple of weeks old. So we feel pretty solid on the guidance on the rate part of it. And the momentum in the business in terms of new assets, fee and commission income generation, and really the strength of the franchise gives us a lot of confidence about that revenue momentum. 2023,
as you say, you're comfortable with the forward curves. That will give you the top-line revenue. But when you look at rates volatility, last year was monster. The UK imploded. The Fed put on 400 basis points. How do you see volatility 2023? Do you think it's going to be more a China, Japan yield curve control explosion? Is that what I should focus on for vol in 2023?
As you say, it was a remarkable year in 2022 for volatility, and there was some direction to the market. Although, as you also know, there was some sort of disjointed moves in the market during the year in a number of different times. It wasn't just the sterling complex. There was a lot that went on. I would expect this year to see a moderation of that volatility, but as you say, we don't rule out that there are going to be more discontinuities. The yen complex is one that we look at in the transition of leadership at the Bank of Japan.
Do you think that could be the depth charge for volatility this year? Everybody's saying that.
We'll see. That's interesting, but I don't know whether that's a real sort of a catalyst for volatility. But what I will say is, with the extent of moves that have taken place, it's actually surprising in a sense that the markets have absorbed that and managed through that volatility and that enormous sea change that we've seen over the last 12 or 15 months in rates without more sort of discontinuous markets. And so we can't rule out that the markets remain fragile, and we'll see some of that volatility.
Those meat-eating bond traders are brave with the key-sheeting commodity traders. We've had the Fed overnight. We'll get to the ECB. We're in Frankfurt, of course. The Fed overnight are talking about the pace of future hikes as opposed to the extent. I mean, this is a dovish tilt, people are saying. Do you think that's going to be welcome? We're near the top. They're trying to guide towards 5%.
Look, I think two things. One is with the pace of rate increases has meant that there hasn't been the pause that you'd like to have as a central banker to see the impact on the economy of the past rate increases. So we think it makes sense. To our mind, it has been the terminal rate that is the key issue, and we don't think there's a change in that. And then after that, the length of time that the central banks stay at the terminal rate. And there is a possibility, I think, that the rate markets are underestimating how long it will take to truly push inflation back to 2%. Our view is the central banks need to stay the course. The risk of blinking, if you like, is a significant risk, as we saw in the 70s. And therefore, there may still be some adjustment to that determination that we think does exist at the central banks to stay the course.